Hello and welcome everybody. SF Live episode 216 on this Tuesday morning. In a few short seconds, I'll be joined by Joe Kelly. He's the CEO of Uranium Markets LLC. They're a middleman in the uranium market, so they know exactly what's happening on the right side and the left side of the table. Supply versus demand. We're going to be catching up with him. Should you buy the hype or sell the bubble? That's what we're trying to find out. And nobody better to ask than Joe. I had a really great conversation just off camera here with him, so I'm looking forward to questioning him on camera. Before we switch over, though, two things. A, be reminded to follow us on YouTube, follow us on Twitter, hit the like and subscribe button. Don't forget to leave a comment, leave a like. What do you think? Are we in a bubble? Is this massive hype? Can you still make money? What do you think? Just leave it. Just leave a comment, leave a like. We want to hear from you as well. Share the video. We do all our videos live, so if you do turn on that little bell notification as well, you will get a push notification either on your phone or on your laptop in your browser as well. So make sure to join us there. And that's it, I think, from my end. Let me switch over to my guest. And Joe, I'm excited to have you on the program. Thanks for joining me. It's good to see you. Yeah, it's the first time on SF Live. First time we're actually really talking uranium here on SF Live. So why don't you start with a quick introduction, and then we'll take it from there and dive into the fundamentals. Fantastic. Yeah, let's dive into that. And maybe we'll start with a bit of history. You mentioned, of course, there have been like other price spikes in the past, but let's go back a couple weeks. What sparked renewed interest in the uranium sector from your point of view, and why? It seems like it was lingering under the surface, but what was the final trigger to get us going?
It was a Uranium Participation Corporation, which has millions and millions of pounds under their control. It had some UF6, it had some U308 in its different storage locations, and it basically wasn't serving the community as the community wanted it to, as the more interest came into the sector. So Sprott came and got involved in it, or Sprott came in and took over it, and they launched Sprott. And they've now made it very easy for the investor to take cash and convert that cash into physical uranium. So they created a vehicle so that way all those people who felt that uranium is undervalued, that they can now invest in the fund, and they could automatically convert the undervalued uranium into shares, so they could trade it as an equity rather than the clumsy trading of it as a physical commodity.
That is an interesting one, because I've been reading the other day, and I'm just getting caught up on it as well. Like they're still trading at a discount to NAV, the Sprott Uranium Trust. So I'm quite intrigued by that, and see if
It
that
traded yesterday there. It wasn't trading as a discount. It's been trading at a premium, and they've raised And only as it
Yeah.
trades at a premium can they raise the millions and millions of dollars. Yes. And
That's
go ahead. I'm sorry.
No, that's fantastic. Like it's interesting, like how quickly a market can turn around like that, right? And let's talk about the fundamentals of the uranium market for a second before we like dive into like who's really playing in it as well. Like how big is the market? Like one thing I'm trying to wrap my head around is the supply side. Okay, I don't understand it just yet. For me, it's a big black hole. Can you shed some light on that for us?
Well, there's about 450 nuclear power plants around the world, and it's an abundant commodity. It's the seventh most prevalent, seventh most element on the planet. So it's everywhere. Because if you do the calculations, we're only talking. What are we now at? $50 a pound. Where you have gold is $2,000 an ounce. So if you times the ounces by, you're really talking, uranium is a really, really cheap commodity compared to something in the realm of gold. So it's in a different world. It's available. You have the consumption is growing. In the U.S., we're the world's biggest consumer, but our power plants are dated. But you have China that's building power plants, that's expanding their fleet. You have India that's expanding their fleet. So net, you have a growth in the industry. Now, it's also when you create electricity using nuclear power, using nuclear generation, it's carbon free. So it's once again looked favorably as a way of generating electricity going forward because of global warming reasons. So you don't want to emit carbons. We have other issues. We have spent fuel, but it's carbon neutral. So we don't have to worry about that. So the growth potential seems great. The investors are excited about it. Is it undervalued? Now, that's been the big question. It's been ignored. So investors have not been involved in buying the commodity. It's been oversupplied. Arguably, this an abundance of uranium. It traded as low. We printed a deal with a power plant here in the U.S. where they bought uranium at $17.75 some time ago. Average cost of production is much higher than that, and the average cost of production has been much higher than the transactions we've been doing for a number of years. So over time, you're going to think that supply is going to diminish, going to decrease, which arguably it did, but there's still plenty of uranium available. So here you have a dynamic where production has slowed, demand has, I guess, arguably increased, and basically the price that you're selling uranium for, that it's trading for, is less than the cost of production. So that leads to something. So in this case here, in our environment where there's plenty of cash available, if you take a look at our commodity, then basically you say, well, I'm tired of investing in traditional investments because they're overpriced. Here's an ignored industry, an ignored commodity. So why don't we find a vehicle to invest our cash into something that could be ignored when everything is way overpriced? So in our world right now, we know there's a lot of money. People are flush with cash. So therefore, they're using their cash to increase the value of their cash. There's Bitcoin, there's crypto, but that kind of, it's been on a run already. Uranium has been ignored. So now it's on a run. We went from our trading in the mid 20s to now it's in the spotlight again. And now we're trading, we just printed a trade today at $50. So which is a considerable increase and certainly unexpected in our industry. But the question is, and the question you asked me beforehand, is it cheap? Is it expensive? Is it undervalued? Was it undervalued? Is it fairly valued now? Those are great questions.
Yeah, let's get to the bottom of that. Let's look at the fundamentals and the supply side. You made one comment where you said, well, there's plenty of supply available. Okay, so where is that coming from? Because I'm expecting a black swan event or something where somebody says, well, here's another 10 million pounds or here's another 100 million pounds coming out of nowhere. And of course, you mentioned price as well, where companies start getting profitable again, producing, where that break-even point is rumored to be around $55, $60 a pound uranium as well. Can you elaborate on that supply, like on the supply side specifics? Like, do we have to expect... In the copper market, it's China, for example, somebody coming out and saying, okay, here's another 100 million pounds. We flood the market and we're back to $30 where we started?
Well, the thing is, well, kind of no, because we've had issues of a lot of supply. McArthur River, Chemico, one of the large producers, Canadian company, they just recently shut down one of their largest mines. I believe it puts about 18 million pounds a year into the market, and they've shut that down due to lower prices. So there's been a lot of mine shutdowns, which has been stopping the production and slowing the production. And now that there's a disproportionate amount of consumption by the investor community, the price has gone up. Now, the interesting thing, as the price goes up, will that bring utilities to the marketplace for them to buy uranium that they need? Will the price continue to remain high? If it continues to remain high, the utilities will eventually have to pay this price. They traditionally don't chase a bull market. Your utilities are patient because they've been rewarded over the years by being patient, except for back in 2007 that I made a reference to before, where there were some deals where utilities were printing over $100, as high as $136 a pound, because, well, they waited too long. In this case here, we had oversupply for a long time for a number of reasons. We had adequate mining of the commodity. We had secondary supply, which came from stockpiles from certain countries, and we also had supply coming from the enrichers, where the enrichers they would, due to lack of demand in their enrichment, they would underfeed their centrifuges, and they would just run them longer and create the enriched uranium product at the requirements of the nuclear power plants, but put less uranium in, so they'd sell that uranium back to the market. With the price going up, that can still happen. There still will be some supply coming from the enrichers. But it looks like with the amount consumed, the millions and millions of pounds that have been consumed, it might bring us into an equilibrium where we're finding the prices we're achieving now, the 8-year, 7-year highs, might actually be where we're supposed to be. I, as the middleman, I can't say I want prices to go up, and I can't say I want them to go down. When we speak to the utilities, we make reference to the price decline being a good thing. When we speak to the producers, we say a price increase is a good thing. So that's how the middleman has to operate when speaking to both the supply side and the demand side. So we don't have a dog in the fight. We don't care whether it goes up and down. We just match buyers and sellers together, creating transparency and real-time pricing so people know where it truly is.
Okay, so obviously price goes up when there's more buyers than sellers. And who is buying right now? Yes, we have the Sprott Uranium Trust, of course, right now soaking up the market. Are they the only buyers, or has that triggered additional buying from other groups? I hear the Kazakhs, or Kazatomprom, I hope I said that properly, are also in the market buying, and they're a producer. Right? Is Cameco still buying? Like, where is all that demand all of a sudden coming from? Because me, as the retail investor, all I can do is pretty much either buy the producing companies like a Cameco or Kazatomprom, or I can buy the Sprott Trust, but I can't buy physical gold, go down to my dealer and buy physical gold uranium, down here.
Well, you can. We've had a lot of outside investors come in and buy physical uranium. I guess the issue is you just can't take delivery. So we have in the Western world, we have 3 storage locations where you can actually own a certificate that tells you that you're the owner of a certain amount of physical uranium. So there has been a fair amount of investors who have entered the market, and they themselves have gone in and bought physical uranium. We had something that we've never seen before, where some junior miners, some aspiring miners they're in the process of setting up their mine to sometime in the future sell uranium. They had the capital markets come to them, and their investors and their shareholders, and they helped them raise money to actually go into the market and buy physical uranium. So there's been a number of these small mines, these non-producing mines or JVs, we refer to them as. They bought millions and millions of pounds of uranium. Then comes a split, where split basically made the investor community, due to call it hype, call it information to people who needed to know, call it factual data. They looked at uranium, they analyzed it, they decided that basically it's underpriced. So then they put millions of dollars into the fund, and the fund that then went and bought millions and millions of pounds of uranium, and they have a plan to continue to do that as long as the demand is there. Now, the interesting thing here is, if you invest in the equities, in the developing mines, if you follow this trend, when they came in buying the physical, all those equities are up considerably, and they're up unprecedented levels as well. But then another thing to supercharge that is, when the physical uranium itself goes up in price, those aspiring mines then calculating the value of their pounds in the ground, unmined uranium, also goes up. So the more it's a self-fulfilling prophecy here, where basically the higher the physical uranium price goes, the higher the equities go, and the equity market is arguably a lot larger than our commodities market, and basically they're fueling the growth or the certainly the appreciation of the value of the equities. So what's to stop them from continuing to put money into SPUT, and then that drives their equity investments up as well. So it looks like it could continue. It looks like it could have legs. It's an issue of never before has the uranium commodities market been tied to anything other than itself. Now we seem somewhat tied to the equities. If equities are performing well, people then putting money into SPUT. If they're putting money into SPUT, it's trading at a premium to net asset value. If it trades at a premium to net asset value, then SPUT automatically converts the cash, the premium, into equities. They sell more equities into the fund, and then they buy more uranium with the money they raise doing so.
Interesting. And you just mentioned that you see the rally somewhat continuing because there's still very high interest in acquiring uranium. We have one question here on YouTube, because as we are live in the YouTube chat, actually. And the question is, like, does Joe think this uranium bull market will end in a blow off top like the last two bull markets? Is it just going to explode to $130, $140? Or do you think there's going to be a bit more moderation as new production might come online before that happens?
Well, Kai, in the nuclear industry, we don't like to use the term explode. So if you can use another term for, obviously I'm kidding.
Rally. Let's use rally. Okay.
Talk about that. And you know what? It's hard to say, because basically we're in an unprecedented 8-year high. The last time this happened, there was a component missing right now, which is a component we could put on a lesser scale. We'll call it optimism. Back in 2007, they called it the nuclear renaissance, where there was discussions and actually projects starting here in the United States to build out brand new nuclear power plants across the country, across the world. There was a lot of talk. China had a very, very optimistic program about building a lot of nuclear power plants. So to an industry that kind of felt that it really wasn't growing, it was kind of a flat and maybe even going backwards for a number of decades, found itself in a situation where, once again, it was favorable due to global warming, as we mentioned before, a carbon neutral form of electricity that's reliable. So back in 2007, it became popular again. Even I remember going to a conference, and Greenpeace was at the conference, and they were there and supporting the nuclear power, where for years they talked about nuclear as being an evil, a very, very bad thing. So we had the nuclear renaissance back in 2007. We have a favorable view of no carbon electricity generation, but it's not the renaissance. So it's a lesser degree, but the investor interest is unlike it was before. The liquidity and transparency is more enhanced than it was before. In the creation of SPUT, created a direct vehicle to put cash in and convert that into uranium, creating demand in uranium. There was a lot more players, and the function I perform, and my partners Ross Corbett and Alexandra Paskey, Alexandra out of New York and Ross out of London. What we do is we add a degree of liquidity that didn't exist before. Deals were done at conferences in the old dark smoke-filled back rooms of conference centers, and they'd strike deals back then with the uranium. Where now we have an open market. We put out prices on a regular basis. When a deal takes place at a price point, it gets spread out to the entire marketplace immediately. So there's real-time pricing. We have an end-of-day price. We have a beginning-of-the-day price. We're back in 2007. We only had a end-of-month price, basically, and it was hard for people to understand where things were trading. So liquidity is different now. Transparency is different now. So we'll see. I don't know if we'll hit the peak we hit in 2007. We could go down, we could go up. There are many that are speaking the bull tail at this point. There are many that say it can't go. I guess a lot of utilities say it can't go a lot higher due to supply, the abundance of supply. But now we're at an interesting crossroad right now. We don't know where it's going up or down from here.
Yeah. How big is the overall uranium market in dollar terms? Do you have a rough idea?
I think I'm not that's not my field of expertise.
Yeah.
I have a financial background, always as an intermediary. There is a UX consulting and trade tech who do all the technical analytics, and everyone invested. I think it's, well, I don't know, 150 million pounds a year.
Oh, sorry, I was talking dollar terms. So let's say 150 million pounds a year. That's $5 billion market. So Sprott, let's really just rough estimate is, let's say 20% of the overall market, because that leads to my next question is like regulation, right? I just read an article in the Financial Times this morning that Sprott now owns pretty much 28 million pounds of uranium, which is the yearly consumption of all of France's nuclear reactors. Mm-hmm. And that's when it starts to get interesting and strategic for governments. Do you have a comment on that?
I do, and the balance is important, because we can't have somebody go in there and consume all the fuel necessary to operate the nuclear power plants, because that just wouldn't be productive. Here we are, it's being viewed favorably because we're creating electricity and not emitting carbons. And now, if we can't run those power plants because there's no supply, then that defeats the whole purpose. So there's some balance where the commodity could have not been undervalued. Certainly undervalued at $17.75 at the low we traded some years ago, post Fukushima, and also is $50 expensive? Is $100 the true price to bring the right amount of production on to satisfy the needs of the nuclear power plants? A lot of times, investors, arguably, if you're a consumer, you might argue that an investor is a bad player in the market because they drove the price up. As the intermediary and somebody who's always been that had that job, that's not necessarily the case, because the investor might identify a market that's in a decline of production, which could cause a shortage sometime in the future that cannot be manageable. So in this case here, you might argue the price of uranium is being brought up in order to encourage healthy production in the future. So the higher pricing, the more likely we're going to have production. It's not a commodity that we're going to exhaust and make go away. It's a commodity that continue to fuel nuclear power plants for hundreds of years going forward. So we're not worried about running out. We're just worried about having enough supply. So if you bring the price up, and the investors are responsible for bringing the price up, which brings on healthy production, then they've formed a positive function for the market.
Yeah, fantastic. I think that's a good comment as well. I think we got to be realistic about that, because above $60, we will see more supply coming online. And funny enough, we had that discussion on Twitter the other day. I think there's uranium even in gold deposits and as byproducts of other mines as well. So it's quite interesting to see that. We just got one more question, and then we're going to wrap this up here, Joe. I really appreciate your time. And it's actually a question that goes a little bit over my head, because it's wondering if trading the past couple of months consisted of only yellow cake, or was there trading deals done for UF6 and EUP2? If yes, what amounts of UF6 or EUP were traded? Do you have an opinion on that?
Well, there has been a fair amount of UF6 trading, especially recently, because people wanted to take advantage of the U308 component of the UF6. UF6, leading up to present time, had recently had a positive price run. It was conversion, which is the process of taking U308 and turning it into uranium hexafluoride, became more abundant than the producers wanted, and the price was below the cost of producing UF6. So recently it's been brought up, but now what's happening is some people are trying to extract the value of the uranium component by selling UF6, and it's putting a little price pressure on conversion. So there is a few transactions in UF6 based on people trying to take advantage of the higher pricing U308. But as I mentioned before, UF6 is more times than not purchased by not the investor, but by the utility. And utilities have gone quiet because they traditionally don't fuel a rally. So they tend to sideline a rally, waiting for the prices to come off and then purchase uranium at that point. At EUP, there's interest in selling EUP. Once again, utilities have gone quiet. When you calculate the value of EUP, the U308 component, the conversion component, the SWU, separative work unit component, which all those added together equals your EUP, those valuations where demand exists in the SWU component in the utilities, as well as the conversion component, and they're gone a little quiet now. So I tend to believe that there's a little slowdown in the further out the fuel cycle sales, and all eyes are on U3O8 right now because that's where the investor is investing in the commodity.
Fantastic. All right, Joe, appreciate you answering that question. And let's end on an actionable note. Are you buying the hype or selling the bubble? What should we do?
Well, that was your question early on. Buying the hype, selling the bubble. As the middleman, I've got to tell people that it sometimes arguably can be expensive, and then sometimes I have to tell people that it could go up, and I've got to do the calculations. What's the likelihood of the investment community coming in, buying this uranium and making it go higher? Well, I've told people, I said, one thing that's absolutely certain is that there is more money than there is uranium. And in this case here, if people still want to invest or put money into uranium, they can exceed all supply that exists, bringing price up. As we talked about before, when demand exceeds supply, price goes up. But we are also at at 5-year highs, 8-year highs, and these highs have not been achieved since pre-Fukushima. And we've closed down a lot of power plants after we had that nuclear disaster in Fukushima some 12 years ago. So with the lesser nuclear power plants and the supply overage that we've had for a long time, that there still is the potential of supply, and with new supply, as Kai, we talked about, over $60, there's arguably a lot of supply that could come on. So I've got to argue both sides. It looks like I'm avoiding the answer. I dabble a little in politics, so I understand that sometimes one must avoid the answer. In my role, I can't say whether it's going to go up or down from here, but I've got to give fair warning to the utility clients of mine that there is more money than there is uranium. And I've got to give fair warning to anyone who wants to invest in uranium that we are at 8-year highs, and it could come off these highs.
Fantastic. I think that was exactly, like, people were listening carefully. There was great advice in there. And buy until a certain price, I think, point is reached where we see more supply coming on. That's my opinion. That's my feedback on that. Joe, it was fantastic speaking with you. We'll definitely have you back on very, very soon to catch up on what's going on in the sector. It's quite exciting to see a commodity rally. So I appreciate that, Joe, and thanks for your time.
Well, thanks for having me, Kai. Great. Have a great day.
Oh, I forgot to ask you earlier, where can we find more of your work? I think it's uraniummarkets.com. Is that correct?
It's uraniummarkets.com, but we're an old school traditional brokerage, most of it's voice. So basically, I give out my phone number. It's my personal phone number. You can get me 24/7 if you have any questions relating to physical uranium. It's 203-536-0025. And just ask for me, Joe Kelly, and I'm happy to talk to you, whether you're a physical uranium investor or just a investor in the equities. Happy to talk to you. 203-536-0025.
Fantastic. Joe, thanks so much. That was great. And let me just do the outro real quick. And I appreciate everybody tuning in to episode 216 this morning. We were joined by Joe Kelly, CEO of Uranium Markets LLC out of Greenwich, Connecticut. It was a great pleasure catching up with him. Should you buy the hype or sell the bubble? And I think we worked out there's a bit of room to grow. And we're not just at bubble stage yet, but keep an eye on the price per pound and watch new supply coming online when those prices are being hit. Thanks for joining us. Thanks for tuning in. Make sure to follow us and hit the like and subscribe button as well. Leave a comment, and we'll be back with more live content very, very soon.